How's it going, everybody? Welcome to the Real Estate Investing Club. Gabe, your host here. We have a very special guest with us today, so grab your pen and paper and prepare for some wisdom bombs coming your way. Before we get started, I do want to say that this is a free course, and we do really enjoy doing this. So the easiest way for you to support us, if you like this show, is to subscribe, like, and share with your friends and family. That's the easiest way, and we really appreciate it. Secondly, we're an active investing company. We market nationally for properties. So if you want to join our buyers list, become a partner in a program, or if you want to bring us a deal for a single family, multifamily, or mobile home and RV parks, go to www.therealestateinvestingclub.com to get in contact with one of our partners. Finally, we developed a course for everybody wanting to get involved in single family, multifamily, and mobile home and RV parks. So if you want to do that, if you want to learn how to invest in those asset classes, go to www.therealestateinvestingclub.com and check out our course there. That's all I have to say for now. So I hope you guys enjoy the show, and I look forward to seeing you guys on the other side. All right, we are live. Today we have Aaron Fragnito, co-owner of People's Capital Group and host of the Passive Cash Flow podcast. Aaron, thank you very much for joining us. How are you doing today?
I'm doing great, Gabe. Doing great. I had some morning videos out in the sun here, so that was nice. And now we are doing a podcast. In fact, I'm going to start doing my podcast live as well. So that's a good choice. Good choice there.
I love it. And we're kind of straddling the U.S. You're on the East Coast. I'm on the West Coast. So we've got every time zone included here.
Awesome.
To get us started, why don't you tell everybody, who you are, where you're from, and how you got started in real estate in the first place?
Sure. So my name is Aaron Fragnito. I'm co-owner of a company called People's Capital Group. And, I was graduating college in 2009, and the economy was collapsing in front of us. And I was an entrepreneur major, didn't really know what I wanted to do with my life. And I read a book called Rich Dad, Poor Dad. You probably hear that every single day, right?
So the seminal article for
$150,000 education, I really had no idea what wealth was, why 1% of the country is extremely wealthy and the rest of us work so hard to get there. And I realized that wealth is actually just an idea. So you have to understand money, and real estate's a great asset class to build wealth in. So what is it? I think over 70% of the millionaires started with real estate or have some type of real estate.
Something
right?
crazy like that.
I realized I had a passion for it. My father always had a condo in New Jersey here. And he always said the best investment he ever made was real estate. He always wanted to do more real estate. So I would always go help him turn it over between tenants. And I always wanted to own like a big condo development as a kid. So light bulb kind of went off in the head. I put two and two together. And I actually moved out to Colorado in Steamboat Springs to teach kids how to ski for about 6 months. And I read David Lindahl and I read Trump University. And they said, oh, it's easy. You just raise a little money and you put down a deposit and you hire a management company and boom, you're a multi-million-dollar real estate investor. So recognizing how easy it was, I got my real estate license and went back to New Jersey and realized that the books actually made it seem a lot easier than it was in real life. And for the last 10 years, I've flipped over 50 houses with my partner, Seth Martinez. We built up to about 100 units over about a 5-year period, fired some management companies, ended up developing our own through necessity. And we execute that buy, renovate, refinance strategy here in New Jersey, simply in North Jersey. We stick to what we know. We focus on these markets here.
Awesome. I love it. So, and I hate that that most of
I can't hear you. I can't hear you.
Oop, 1 second. Let me double check. So it looks like my audio is good on my side. Can you hear me?
Still can't hear you.
Still can't hear me. All right. Stick with us, ladies and
sorry,
gentlemen.
Man. My volume was down. All
I
right.
love it.
No worries, Dave.
I love it.
I can hear you now. Go ahead. My
that
friend.
is the beauty of podcasts right there.
Right.
So, I was saying, I hate it when like those, there's all those gurus out there who kind of paint real estate investing in this light of, hey man, you just got to do these 3 things. You're going to be a millionaire. Super easy. It's not that easy. But it's great that the information's out there. And I like that you started on the real estate Bible of Robert Kiyosaki there.
That's actually, and then through the years, I went to the guru classes. They never got $30,000 out of me, luckily, because I do meet a lot of people these days who have paid $30,000, $50,000, $60,000 for a coach and they do like a group phone call every week. And the guy is like, on the other side of the country, and they're asking like in-depth real estate questions about investing in New Jersey, which you got to know the New Jersey market, rent control laws. They change from town to town. So, if you're going to pay 60 grand for a real estate coach, I mean, they better know exactly how to get you from zero to hero. And I've met people that said, listen, I had $60,000, but I gave it to some guru at some high
bought a
pressure
house with
boot
that,
camp, right? And I have no money to invest. I'm like, oh, well, the guru told me I could do 0% down investing. So I gave him all my money for his books and CDs. And I don't sell education for that purpose. I don't like it.
Yep. And that's not to say all of the education out there is horrible, but you're right. There are some sharks out there just looking to get your money. I was actually not really victim, but I did buy $5,000 for one of those things. And I don't think it was worth $5,000, but for anybody listening and watching out there, if you are thinking about, going with a guru, getting into his course or anything like that, just make sure that it's below $10,000 and make sure that there are actual case studies out there.
Right. And if you really want their content, go on eBay or go online and Google it, and you'll probably find people selling those packages of content for, a fraction of the price. Buy it, digest it, and if you feel like you want their hands-on coaching at that point, then hire it. I mean, I just paid $5,000 to a YouTube company to help me create YouTube ads. Coaching is super important. I'll spend the money. I'll invest money. It's so important to have the right coaches and the right people guiding you. But real estate is this wild west of talking heads. I did one deal. You could buy my course for 20. Like, okay, buddy. Yeah.
I love it. All right. So a little bit off course. I'm going to take us back. Just going back to your story. So you were in college, you were entrepreneurial studies. Your dad had one condo and he was, you kind of helped him with that. And that just kind of got the bug for real estate investing for you. You kind of clicked. You realized that it's the real way to make wealth. And I think you're right. I think it's something like 70% of millionaires made it through real estate. So then you went to Colorado and started skiing. And that is awesome because it sounds like a vacation. But you read a bunch of books on real estate investing. Again, it got the bug going. And at that point, it sounds like you moved back to Jersey and started to flip, or did you stay there in Colorado and work from?
Correct. So I made a list. I said, all right, I don't know anything about real estate. I don't have any money. I'm a ski instructor. I have a college degree. I'm an entrepreneur major. I got the degree there. I understood. I had a little painting business in the past, a little landscaping business. But I made a list. I said, I want to have $1 million in net worth in 10 years and $100,000 of passive income, cash flow from that property, right? Those properties. So that was the goal. So I said, I worked my way down. I said, okay, I need to make connections, raise capital, figure out how real estate works, figure out what type of real estate I'm going to buy. And I know I wanted apartment buildings, in New Jersey. That was kind of like roughly what I thought would work based on my research. And, so I said, okay, the first step is probably getting my real estate license, learning transactions and meeting people who are actually moving and shaking in this industry. So I did that. I moved back to New Jersey in 2010. I got licensed. My first 6 months as a real estate agent, I made $0. I was working my butt off, terrible market. I remember I finally made a $5,000 commission, and my broker, the worst broker I've ever had, gave me $500 of it and said, read the fine print. And next day I was out of there. I was out of there. And he was like, why are you leaving? I couldn't believe it. It was crazy. I was like, buddy, are you kidding me? All you've been is verbally berating me for 6 months. Now you stole my money. So I realized you got to work with people that are working with you, not against you. Then I teamed up with a business partner who stole some money, flipping a house. I recognized you got to work with people that are more successful than you. This guy had run a coaching business to coach business owners how to run successful businesses, and his coaching business for business leaders went bankrupt. That's who I selected to start flipping houses with, and had some challenges there. So finally, I met Seth Martinez around 2011, and our dreams aligned. He said, I just sold a medical billing company. I was actually his realtor, and he would submit really low offers and just get properties for pennies on the dollar. And I was learning so much from him. But he wasn't great with, public speaking or just like connecting with individuals and raising capital. He was very good at analytics of it, dealing with these contractors and property managers, that you really have to kind of be a bit of a hard ass with and kind of, very straightforward. Where I'm a nicer, I'm a little like more, I'm the sales end of it. I'm the fundraising, the branding and marketing end of it. So our skills and weaknesses, our strengths and weaknesses really aligned. We recognized that. I loved what he was doing. He loved what I was doing, bringing in deals. He had a ton of capital. I had no capital. He had the skills to manage it. I had the skills to find it and bring in more capital. So we bought a 6-family from a We Buy Houses sign that I used to staple on telephone poles in a suit and tie in the middle of summer. Don't wear a suit and tie doing that. And, but that worked. Back then, the phone was ringing. So we got a bunch of deals. We bought a 6-family for $220. We put probably $50,000 into it, got it fully leased up, making $5,000, $6,000 a year in cash flow. Now it makes like $8,000 a year in cash flow. And we refinanced. We refinanced all of our money back out, and we rinsed and repeat. So we redid that. We raised more capital. We teamed up with more investors. We started a real estate networking group that now has over 3,600 members in it. That's been a godsend of additional private capital coming in the door every day. And that's allowed us to grow. And then we had our growing pains. We flipped a lot of houses. We made $1 million flipping houses one year. We're like, we're the best house flippers in Jersey. So we were like, let's go flip $1 million homes. So we went out and flipped $1 million homes. Guess what? No way.
Different.
You use this. Yeah, it's totally different space. You use the same contractors you use in inner city areas, $1 million homes. You're going to get the wrong product, and it's not going to work out. So that was not a good movement for us. And we made those mistakes along the way. We corrected our path, and we said, listen, if you're good at a couple things in business, whatever it is, whatever business you're in, and you're making money doing it, just keep doing that and just be the best at that. We said, okay, we're going to flip mid to small homes here and there. We're going to focus up mainly on apartment buildings in New Jersey, and developed our management company to really fine tune that system.
I love it. There's a lot of good gems in there that I kind of picked up, during your story. You said, well, first of all, it's funny that you said $5,000 was your first commission, because for some reason it seems like everybody starts out with $5,000. My first wholesale deal was $5,000. Both my partners, their first wholesale deals was $5,000. So if anybody is, getting into real estate and they're going to do a wholesale deal, they're going to, close the deal as an agent, and they see the $5,000 check and they're like, all this money for this much. That's how everybody starts. Evidently, that is the entryway into the real estate world. So I thought that was pretty funny. But the lesson that I really liked from what you said, first of all, you got to find good partners. There are some people just that don't have the integrity that you do need in business and real estate. And so you really got to find people that mesh with your skills and just have high integrity. They're not going to cheat. They're not going to cut corners, anything like that. And I love that, the lesson that you pulled out of that.
Yeah. And then one more thing there, I think it's so important. Like, you can make money in Seattle or New York or Texas. You can make money flipping houses or buying warehouses or buying apartment buildings, if you're really good at it. But the bottom line is your partnership, right? The partners you work with. And I could not do what I do without Seth. I work 50, 60 hours a day with investor relations. And that alone, you need a whole back office. You need a killer team running the operations, running the projects to do what we do out there. So it's so important. Mm-hmm.
Absolutely. Yeah. There's three people on our team, 3 partners, and we all bring different skills to the team. And I mean, that's so important. First, because I trust them. And then because, we kind of mesh, and the way that we come together really works. And so I love that you have partners. Not everybody needs a partner, but if you do, it really does help out well. Mm-hmm. So you got started, and then you got your first multifamily from Bandit Signs. That I did a lot of work with Bandit Signs back in the day, and I got zilch. Like it was just crickets out there. But I'm surprised you got a Bandit sign. Do you still?
Yeah. When was that? When were you trying with Bandit Signs?
Probably 5 years ago.
So yeah, you came in a little too late. 2010. Don't forget, no one could see. You would list a home for sale on the market. You would look at the comps. You'd be like, okay, your home's worth $300,000 based on comparable sales. And you'd list it for, $299 and expect a bid. But no one called. No one called the listings. No one was buying houses. So you're driving down the road. If you're a seller, you see a We Buy Houses sign. I had a great return on investment. But around 2016, 2015, it became a seller's market, and the buyers were knocking down their door, and they didn't need our we buy houses signs anymore. So
That
give it a little
makes a
time.
lot more sense. I remember I bought 100 bandit signs, and I spent all weekend one time just driving around everywhere, putting them. I even had my Google map. I'd put a little pin everywhere that I put a bandit sign, and you saw
Wow.
my map, and it was just like chicken pox down the Western Washington. And I got zero, but that makes a lot more sense because it was a seller's market, and so people
Yeah.
didn't need to do that. Makes sense.
Mm-hmm.
Awesome. So let's go into your business. We've heard a lot about your story so up to this point. Let's go into the business, how it operates now. You guys are you're focused on multifamily, and you're using the BRRRR strategy. I don't know how many R's: buy, rehab, refinance, repeat, blah 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 blah. So you do the BRRRR strategy, and you do that in New Jersey, and it's multifamily. So
Correct.
tell us. We all know real estate. There's a process. It goes, front to back. The very beginning of this is lead generation. It sounds like that's what you're the master at. So tell us, how do you guys go about generating leads for your multifamily deals today?
As far as finding the opportunities, well, first thing we do is a lot of direct mail marketing to worn out landlords, an older demographic of landlords in this area. We do focus on, basically 3 or 4 counties here in New Jersey. And the good news about New Jersey is there's so much people here, there's so much real estate that all you need to do is really focus on a top like 3 or 4 counties in North Jersey. And there's a ton of inventory if you know where to look. So we spend some months up to $10,000 in direct mail marketing to worn out landlords. And the hardest part is finding a good deal. Usually we can raise the capital quite quickly. We have a good network of investors, a lot of wealth in this area. We're doing this about 10 years, so a lot of repeat investors. And so basically, we've tried to pinpoint those deals, but we'll look at hundreds of properties on paper to cherry pick one. And that's one of the hardest parts of our job. Seth really helps out with that a lot, my business partner. And then we have relationships with brokers. Normally you get above the $3 million mark or so, 2 to 3 million, those owners start to really hire brokers, okay? And that's good because the brokers tend to be the glue of the deal and push the deal along a little faster. Where when it's just an 80-year-old guy and us, and we're trying to negotiate, and his attorney doesn't do email, that's pretty common. It's out of right, like very frustrating old attorneys that don't do email. They only do fax. Oh, I didn't get the fax. Another week goes by to hear. So the deals move slower with that. Okay, but when we're working with like Marcus and Millichap, we've got great relationships there. Some really hotshot agents in like cities we specifically want to invest in. You don't have to know every broker, you just have to know the guys that are offering the products you're looking for. And generally, if you're finding them on LoopNet, it might not be that property we're going to buy, but I'm going to, if I'm on a broker listing 3 or 4 properties on LoopNet that are kind of the criteria I'm looking for, mid-sized, small apartment buildings in North Jersey, then I'm going to contact him. I'm going to take him out to lunch, maybe invite him over to the office, whatever it is, stop by and say hi. Build that relationship, more importantly, close a deal with that broker, put thousands of dollars in their pocket, and you're going to be their new best friend. And, those brokers, the way commercial real estate works is by the time something hits the open market, it's been brought to guys like us
death, yep.
3 times over. In fact, we had weeks to review it, nail down every number, decide if we want it or not. And when we say, no, it goes out to the open market. So that's how commercial real estate works. It's not like residential real estate, where when you're sitting in someone's kitchen, you get a listing agreement that has to go on the MLS the next day. Some brokers play games with that, but for the most part, residential real estate is very restricted and regulated for many reasons. And that forces the property, it's hard to find an off-market deal through a broker in residential real estate, but the commercial game's different, and those relationships are priceless.
Yeah, absolutely. We've seen that ourselves, and off-market deals for commercial is actually, we found to be more effective than on-market. And so, yeah, I love that you said that. So the 2 main ways that you guys get deals is you do direct mail and brokers, right?
Correct. Yeah. We also have wholesalers we work with, but wholesalers tend to attract some smaller deals, and for the residential side, we still flip houses and wholesale houses. So we'll work with wholesalers there. However, it's getting harder and harder to find a deal here in this market. I'm sure you find the same thing.
Yeah, absolutely. The competition's fierce out there. We're doing mobile home and RV parks, so we're in a little bit of different area, but still it's pretty fierce, But you do $10,000 a month in direct mail, which is I mean, that's a high number. Do you guys have any active income, or do you only purchase to buy? Do you wholesale deals as well, or do you only purchase, to do the BRRRR strategy?
Sure, sure. So, we don't spend 10,000 every month in direct mail. 10,000 is generally our marketing budget. That includes online marketing, residential marketing, and some marketing to raise capital as well. So we're always looking, we're always putting money back into marketing. We are big fans of taking about, a third of our available cash flow every month and putting it back into marketing, right? So that's really our goal, sometimes even more. And we wholesale real estate. We wholesaled 60 properties in 2016. We made $1 million in wholesale fees.
Nice. I love it.
Crazy year. The sheriff sale auctions were on fire. We'd go there with $1 million. We'd play 3 or 4 counties. Seth and I were going to different counties every day, and boom, 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 and we were flying them off the shelves to our list of 2,000 buyers. So it was great. We really made hay while the sun shined, and we had flipped a lot of houses, but that's gotten much, much harder to find those deals. The amount of money and time we now need to invest in finding a wholesale deal that's going to make me $5,000 to $10,000. Well, first of all, it cost me about $5,000 to get the lead.
Yeah.
So,
yeah.
And if I make 10 grand on it, and we're putting in time, what's the best use of our time? And you really don't want to go against the grain, right? Don't go upstream, right? When you're a business owner, go with the grain, go with the stream, go with the market. So the market's saying, hey, what's a good place right now? Apartment buildings, right? You have low interest rates, you have high rents, you have people that are not really buying apartment buildings all that much. So the prices are actually kind of low.
Interesting.
Compared to like other asset classes out there and other things.
It's different here in Washington, where the apartments are like that is where everybody's trying to buy. And so like your apartment buildings are listing for like a 4 cap. It's like, I don't want that.
Yeah. I mean, the caps definitely have gone down, in the last few years. There's no doubt about it. Like, I wish prices were where they were 6-7 years ago. But like, if you look at a grand chart of, real estate values in general, and from 2009 to like 2000 or the last 10 years, right? The real estate's actually just caught up in a lot of areas to where it was 10 years ago.
Oh, interesting. Okay.
Right. So we had a real estate apocalypse, right? Yep. In 2008 and 2009 and 10. So we lost about a third of your real estate value across the country. Now, real estate's, really pocket markets. What's going on in Seattle is not what's going on in New York, but for the most part, they do correlate some way or another. You also have like the Midwest. I mean, actually, Seattle and New York are probably more correlated than the Midwest is. But, for the most part, you've seen real estate values still catching up to where they were. Now, rents really didn't drop all that much. Rents have continued to grow and skyrocketed. And, that's a problem in Seattle, it's a problem in New York, problem in New Jersey. So if you're the renter, not the landlord, right. but if you are, so it's a perfect storm right now. Rents are sky high. Real estate values got nailed in the last decade and really just started growing in the last 5 years to catch up again. And interest rates are historically just ridiculously low. So like, just look at the math, what am I going to do? Go like spend $5 or $7 grand to find a wholesale lead that I can eke out, $3,000 profit on after looking at like 30 different houses. No, I'm going to focus on where the interest rates are, where rent is, where the macroeconomic forces are pushing me, because I'm not Superman. I don't control the markets. We're all just in this, we're all at the mercy of the markets. So play with the markets. And that's what we're doing right now. Not to mention, we're at 90% collections through a pandemic. We're cash flowing on the stuff where our house flipping business has hit some challenges in the last few months, right? And that's a testament to residential real estate. You always need a roof over your head. Flipping houses may be sexy, but it's not really recession resistant at all.
Yep. And I'm actually, I did 2 flips, and after that, I was like, I'm done. No more flips. It's that's it for me. Mm-hmm. So, I mean, you mentioned a bit like real estate is very cyclical. I mean, you have to go with the stream. Trying to do something that the market doesn't want is not going to work for you. I've heard a lot of rumblings about the commercial sector taking a hit up here, coming up in the next maybe year, 6 months. Kind of from your perspective, how do you see the next 6 months, 12 months playing out for multifamily real estate?
So I am rather confident with multifamily real estate in the right locations, middle of the road real estate. We don't buy class A beachfront condos. That's going to get nailed. We don't buy class D, really rough areas of inner city areas that are, you're just not going to attract the right tenant. Those get hit hard as well. So we buy real estate around opportunity zones, not
Okay.
in the opportunity zones, but we buy around inner city areas and opportunity zones where the cranes are in the air and they're
Nice.
building, Whole Foods is coming in and storefronts and condos and, Newark, New Jersey, Patterson, New Jersey, these cities never really had a high-end market, and finally they're developing these class A markets and good, this is great. It's raising all boats around it. And we are not the cranes in the air. We don't develop class A market. Those guys are taking huge risks and more power to them. But we buy those existing buildings, maybe rents 15% below market, and maybe there's some storage in the basement that we can put in and make another, get the cap rate up another point or two. So there's a lot of different things you can do, little changes. We don't add a level to apartment buildings. We don't knock it down and start over. The less hammers you're swinging, the better, the less risk you have. We have a awesome management company. It's not your average management company. We don't just call plumber when the pipe leaks and collect the rent when it's due. We reposition these buildings. We renegotiate every lease. We find out more ways to make income on the property. We, get the guy off payroll that's getting paid 20 grand to bring the garbage to the corner. We lower our expenses and we figure out how to make these things cash flow machines. And then we refinance and harvest that equity and the investors have exit options at that point. So, this is, what was the original question?
To be honest, I don't remember the original question. I was just kind of following what you were saying. I love it. But I do remember one comment you said. It was follow the cranes in the air, and that my brain kind of stuck on that because I really like it. You got to follow the cranes because that shows you where the value is going, and it shows you where the future value is going to be because that's where development is.
That's right. I'm sorry, I haven't had lunch yet. It's all So you're talking about where the market's going, and I was telling you what my crystal ball was saying. So my crystal ball, which is always wrong, says, no, but listen, we're not buying storefronts. Amazon's taking you out. We're not buying office space. Who needs office space anymore? We're not buying, maybe warehouse is good, but I don't know anything about warehouses. I'm not going to jump into that. We've been doing this for 10 years. If markets values go down a little bit, if rent drops, that's okay. We buy it at where we can have 70% collections and still be covering all our costs, where I listen to a lot of these gurus that I won't say his name, but he's a really big hot shot. You might know exactly what I'm talking about. And he's buying like beachfront, Florida stuff, class A, 10X. And so that guy's going to lose his shirt. He's driving around in his fancy Mercedes talking about how he can be at 85% occupancy and still cover his costs. Guess what, buddy? 85% occupancy, that means 15% of your units are vacant or not paying. That happens real fast in a recession, real freaking fast. So, we're at 90% collections because we manage everything in-house. We also buy affordable real estate that, if you're up in the class A real estate, you can move down to our class B. If you're in a class B and you lose your job, you can move down to the class C. So really affordable, middle of the road, around the cranes in the air. And that's a recipe for continued long-term success in our minds.
Absolutely. I love it. Yeah. And I see affordable housing. I mean, so we're in mobile home RV parks. And so I see affordable housing as what the market really needs right now, especially in areas like that I live, Seattle, California, New York, even New Jersey. Affordable housing, or some areas of New Jersey, affordable housing is what the market's asking for. So you really cannot go, you can go wrong. I was going to say you can't go wrong, but take it with a grain of salt. It is a very, very good bet to go with affordable housing. So I like that you said that. And with the crane thing, we follow Walmart. That's our kind of, we do our own underwriting, our own due diligence, but our rule of thumb is if there's a Walmart within, 10, 20 miles, we're probably safe.
Yeah. And you guys are in a great space there with cash flow, right? Rule number one, never buy an asset that doesn't cash flow. So that's great. And also, I think there's rules on how many more trailer parks they can make or something like that. So that's a great thing to help you build value there. But you're in the cash flow business, and that's the great business to be in. And your assets hold value. So we're a little more in the equity gain business, buying in like near opportunity zones and stuff like that. But you really want to have a diversified portfolio. That's the bottom line.
Awesome. Absolutely. So Aaron, we try to keep this around 30 minutes. We've been having a hard time doing that recently, but but we are around that mark. So I do want to move us forward a little bit. I always ask every guest, real estate, we know it's a roller coaster. It's got its ups, it got its downs, both emotionally and financially. So kind of take us to one of the down periods, one of the times where you really just ran into a wall, and then tell us what was the big lesson that you learned from that experience.
Well, I guess I would like to talk about the getting in the high end flips there and break that down a little bit. Like I said, Seth and I had flipped a few dozen homes by this point, and around 2015, and there was a lot of foreclosures too. So these big properties were kind of going for a song and a dance, and but we used we had a lot of contractors, great relationships with them, and they did great in inner city areas with small projects, and we brought them out to these $1 million homes. And they gave us prices that were phenomenal. And we brought out high-end contractors and got quotes. And we said, holy mackerel, these people live on 2 different planets. And how is it even possible for this contractor to do the job at 180 and this guy to tell me there's no chance to be less than 400?
Yeah.
They're not even close.
What are you guys thinking? Yeah, exactly.
Right? So we're like, well, let's really make sure the lady at 180 knows what she's talking about. Well, she's done a few projects for us. She seems pretty competent. So went ahead with that. She ended up gutting the entire property with her crew, recognizing it would be a $400,000 renovation, and then left the house gutted. So getting her first payment. Right. So, not only did it obviously burn the bridge with the contractor, but it left us with a gutted multi-million-dollar property where we then had to hire the contractor at $400,000 to renovate the home. And he's like, yep. Thank you. And he wasn't any all-star either. But basically, at the end of the day, we had the property on the market and we were able to sell it and retain most of our capital back. So, in that case, what we did with our investors is we wrote them a check at the closing table. They earned 12% interest on their money, and they reinvested down the road on another property. So Seth and I took a hit, but we made good on it. And, that's why it's important to have other things coming in, lots of income properties, lots of other flips, and be a liquid company at all times, so you can always cover any hardships like that.
So it sounds like the lesson there is to kind of hedge or mitigate your risks by diversifying your income streams. Don't just have one income stream. If you're relying on this one flip, and you get the wrong contractor, which is very easy to do, by the way. It's very easy to get the wrong contractor. Then it could put you under if you don't have other sources of revenue. So I love that you're able to get out of that one. We always love hearing turnaround stories. So now take us to the top. You're still in real estate. You still love it. Tell us what gets you out of bed in the morning, and what do you love about real estate?
Sure. Well, it's just, I really do have a passion for it. I really do want to own real estate. You drive through Newark, New Jersey, there's so many abandoned properties sitting there. And the frustrating thing is most of them are actually owned by the city. And if you go to the city and you say, look at my 10-year track record, look at $1 million in the bank, we can be partners. We'll buy your real estate. You'll make money. We'll pay taxes. We'll get these terrible neighborhoods fixed up and get people living in here, get tax revenue again. And the city's like, nope. We're not interested. We're just going to let them sit there vacant because they're basically a tax write-off for the city. So, but once you get through the bureaucracy, it's really an incredible space where you can, it's all about real estate when it comes down to it. You look at anyone's situation, you look at the poverty in America, you look at the inequality in America, it's about real estate. It is,
Yeah, I agree.
I mean, that's what sets them apart, so it's so incredible that it's such a big asset class. It's not taught in schools, really. I mean, it's starting to be taught in schools. I think you can now actually major in real estate, but when I was going to school, you couldn't. So it's this strange wild west of all these gurus, and it's not really taught in schools. No, but it's created the most amount of wealth for the most amount of millionaires, but you can't really learn about it in a university. So it's really an interesting space that intrigued me. I read a stock review this morning, and I was trying to understand it, and they were like, yeah, we lost 4%, and then we charge another 1% in fees. So your net is minus 5% for the quarter. And I'm like,
buddy,
why do people invest in this? I don't get it. I'm finding a mismanaged asset. I'm turning it around. I'm creating value. I'm helping people. I'm giving them, when the pipe leaks, a plumber actually shows up. before that, a slumlord owned it. We're improving the neighborhood one brick at a time. And that's what gets me out of bed in the morning. Honestly, I think a lot of what's created in the financial community, I'm going to get in trouble for saying this, doesn't create value.
Yeah.
All right, I said it.
No, I'm right there with you. I mean, I did do stocks for a little bit, but I never felt like I was really doing anything. Like there was no good coming out of it.
But it's like, I'm going to move this stock from here to there, and I'm going to, now, I own this on, it's like, I don't know, fine. But like, we're actually improving, it's tangible. And people, that's why people, I think, really enjoy investing locally here, because not many people do in New Jersey. And there's a lot of wealth here as well. So people can like drive down the street and check out their apartment building they invest in. I like that.
Absolutely. Absolutely. Well, Aaron, we are at the end of the episode here. I want to thank you for coming on because you've shared a ton of wisdom with everyone. Before we let you go, though, you've given us a lot of stuff or a lot of wisdom. So kind of what would you want to receive if someone were to bring you something? Do you want deals? Do you want referrals? What are you guys looking for at People's Capital Group?
Sure. So we're always looking for mismanaged apartment buildings, but my job is primarily to meet new investors and teach them how I can help them become passive investors. Okay. So our website is peoplescapitalgroup.com. We get a lot of inquiries. You do have to fill out a qualification form to qualify. But if our website, peoplescapitalgroup.com, if you go there and you watch our videos, we have webinars. I do a podcast called the Passive Cash Flow Podcast. I have a YouTube channel. So, learn from our content, educate yourself on how you can either build your portfolio more in real estate passively or just get started with it as a passive investor. And then fill out the form and we'll get in touch with you. And, if you qualify to invest, and that's really what I'm looking to do is always connect with new investors. My goal this year is to meet new investors and not just rely on our pool of investors that are very satisfied and always ready to go, but I want to grow. I want to meet 20 new investors this year, and that's really my goal. So go to peoplescapitalgroup.com and get our education, get our content. It's all free. And then if you like what you hear, fill out the qualification form. We'll see if you qualify.
Awesome, I love it. And you already touched on this, but if somebody did want to get in contact with you, what would be the best way for them to do that?
Yeah, that's the best thing. Our website, probably peoplescapitalgroup.com. We're here in Berkeley Heights, New Jersey on Springfield Ave. So we're going to start opening up in-person events probably in the fall. Right now, everything's online. We're on webinars. But our website's really the best way, peoplescapitalgroup.com.
All right, there you heard it, peoplescapitalgroup.com. That's the best way to get in contact with Aaron. I will also put his LinkedIn profile in the show notes. So if you want to click through there, you can grab that. Other than that, again, Aaron, thank you very much for showing up and sharing everything that you shared. For everybody listening and watching, we appreciate you guys joining us on this journey. Again, the best way that you guys can support the show is just to subscribe, like, and share with your friends and family. And we look forward to seeing everybody on the next episode.
Thanks a lot, Gabe.
Thank you for joining us on the Real Estate Investing Club. If you've watched this far, I'm sure you've gotten a little bit of value out of this. So we would appreciate it if you hit that thumbs up, share it with your friends or family, whatever it may be. And if you'd like to share or partner with us on a deal, we absolutely love partnering on deals and are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode.